Welcome back to this week's market update. Today is Monday, March 10th, 2025, and with that, we will jump right in. Looking at last week's market performance, stocks faced downward pressure last week as concerns over tariffs and a potential economic slowdown weighed on investor sentiment. As of close on Friday, March 7th, all major equity indexes posted losses last week. We saw the Nasdaq Composite down about 3.5%, followed by the S&P 500 down about 3.1%, and the Dow Jones Industrial Average down about 2.4% last week. Bonds also had a negative week with the Barclays Aggregate Bond Index down just shy of 0.9% last week. Taking a look at the economic data from last week, we had the February jobs report as one of the main catalysts of last week's market movement. We saw markets drop on Friday morning following this news. We did see a rise later on Friday afternoon following some comments from Federal Reserve Chair Jerome Powell. So taking a look at the data here, we saw the unemployment rate tick up slightly to 4.1%, still in a very healthy range, although it has been trending up. Then we saw job gains post at 151,000 new jobs in the month of February, which was less than expected. So a bit weaker than expected, but still in a fairly stable range. We saw job gains concentrated in healthcare, financial services, transportation and warehousing, and social assistance, while federal government employment declined. Wage growth remained strong with the average hourly earnings increasing 0.3% month over month and 4% year over year. So compare that wage growth of 4% to the CPI rate near 3%. We're still seeing real wage growth of around 1%, which is a positive sign, despite this weakening in other metrics like payroll growth here. Overall, we're seeing some cracks in the labor market continue to form, but time will tell whether this has the potential to be the start of a downturn or just a short period of some choppier data. We also got the ISM indexes for the month of February here. So taking a look at the ISM manufacturing index, it continued to be positive in the month of February, although it did decline slightly from January's level of 50.9. We saw things like new orders contribute to the slight decline, as well as customers' inventories, employment, production. All of these things were negative contributors to the move. While on the other hand, inventory, supplier deliveries, prices, those have been hot there, and the backlog of orders were positive contributors to the manufacturing index. So overall, it does look like it is a bit of a choppy period. We are seeing the index in slightly positive territory, so that is a good sign. We've been in negative territory for quite some while, which is below 50. Now we're sort of teetering at this positive to neutral level. We'll have to see what the data shows in the coming months. With that fairly strong ISM manufacturing index, we also got a continually strong month in the ISM services here. So you can see it came in at 53.5, which is definitely in bullish territory there, and that was an increase of about 0.7 from January's index. Growth was driven by a growing backlog of orders here, so we can see that was a huge contributor to the month, as well as employment growth, new orders, and inventories, as well as prices, which does signal inflation, but it is still a positive contributor in the index here. On the other hand, we saw small declines in things like business activity and imports as well. So overall, the ISM services has been solid for quite some while, and it continues to be a source of growth for the US. Last but not least, taking a look at the inflation expectations for the week ahead. It is a CPI week, so it will be very important to keep an eye on that later on this week. For the month of February, analysts are currently expecting the CPI to come in at about 2.8%, according to the Federal Reserve Bank of Cleveland, and core CPI at 3.2% in the month of February. So both would be a small drop from January's annual inflation rates. So this would be a very good sign. However, a lot of anecdotal evidence of tariffs, as we just saw in the ISM indexes, those also showed some upward pricing pressure on both the services and manufacturing side of the economy. So Very important things. We'll just have to wait and see if the inflation reports do show some improvement in the CPI metrics, or if there is an unexpected increase due to things like tariffs, due to, there is still a level of heat in the US economy. So we'll have to watch and see the inflation reports this week. Definitely something that you want to keep track of. That concludes this week's market update. It was a shorter week, but we really appreciate you tuning in and we look forward to speaking to you soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.